We're good. All right. So I'll just repeat everything I just said. If you guys have any questions, like on anything I say, again, just drop it in the chat and I'll answer them, all right? So, starting from the top again, the platform we use to provide flow data is Unusual Whales. It's a subscription-based service, but we provide everything for free, so you guys don't need a subscription for it. Um, Now when we refer to like flow, right? Like flow is only talking about options trades. Um, this platform shows us every trade that comes in a single day. So if I'm a trader and I buy, I don't know, SPY calls for $400, it's gonna show up here. I can see every single trade. So even if you place it, like if you place a trade on Nvidia at like 331, I can see it. I can see the exact timestamp, I can see your exact size, the premium that you spent, etc., etc. And the cool thing is I can also see if you bought the calls or you sold the calls. So there's two types, right? You can buy a call or sell a call. I can see that as well. So I have all the information at my fingertips. Now, to use this platform properly, I don't want to look at what I'm doing or respectfully like what you're doing, right? I want to see what like the big guys are doing, like whales, banks. I want to see millions of dollars in premium, and only they have that. So what we do is we filter everything and we get all the clean flow to use as Confluence. So you can see here, SPY puts, EOD, someone bought 427K worth of them, 40T puts on SPY. This is the exact contract. They spent, um, they bought 3,600 contracts, and the trade came in basically at close at 4 o'clock, and they bought some extra after close around 4:05, 4:10. Um, and yeah, that's literally it. Now, why is this useful? Because if some like think about it, right? You're trying to see what big money is doing, what people with like capital and inside knowledge are doing, and this is the best way to do it. You'll see insiders trade options right before earnings. Like you'll see them buy like a crap ton of calls right before earnings, and after earnings, the stock pumps. Why? Because they knew what was going to happen. And I've seen that so many times. One time I was in I think it was Ticker Pizza. Yeah, I was in Ticker Pizza. Flow came in. PZZA. I think you guys can check like go to Google, check out the news from like I think 2, 3 months ago. They had some news with like regulations or I don't know, like a merger or whatever. And an insider knew they were buying like millions of dollars of calls right before the news. I was like, this ticker never gets news, right? I mean, it never gets flow. I got in, and 10 minutes later, news drops and it pumps like 10, 15%. So you guys can catch moves ahead of time based off flow. You guys can see where big money is putting their assets. Like you'll see a ton of bear flow in the recent days for SPY. And that's either you guys can think of it as two things. It's really up to you because this is only data. Either it's hedging or it's just straight out put buying, which again, that means that you can tail it if you want. Like this guy right here. They bought $8 million in SPY puts. So what does this tell me? Maybe I want to tail the same contract. If I think SPY is bearish and someone's spending $8 million on it to go down to 598, then yeah, maybe I'll tail it. So that's basically the entire gist of it. You're just trying to see what other uh, people are doing. Stream is full. How many people do we have? Okay, does anyone have any questions on what I just said? I think that's an issue on your guys' end. I think we just have like a ton of people here. All right. Which kind of flows are more trustworthy? Is there any uncertain threshold for it? Unusual? Yeah. So let's go into yesterday's flow, right? Let's try to analyze yesterday's flow a bit. I'll just go to like the top premium so it's easier to uh, show. All right. So when you're looking at flow, and we're gonna post it like all the good flow and notable flow, we're not gonna post any noise. And if it's a like a hedge, we'll try to assume that and provide that information to you guys. But at the end of the day, it's whatever you guys perceive it to be. I've seen traders use bearish flow as confluence for a hedge, and it works out. Sometimes they just buy the puts outright, and it still works out. It really depends on how you want to use the data, and how you want to perceive the chart. Now, going into the question of what is notable flow, like what is something unusual, it really falls into psychology, right? So we already know that ETFs like SPY, QQQ, and IWM, they get the most options premium by far. They get billions, right? After them, usually it's just the Mag 7 names. So think Nvidia, Microsoft, Apple, Tesla, Amazon, Meta, Google, and yeah, I think that's seven. Um, but yeah, just the Mag 7 names. Mag 7 names, let's just pull up Nvidia, right? Nvidia yesterday got 1.8 billion in total options premium. Like everyone who was trading Nvidia, everything combined, 1.8 billion. So it's a ticker that gets a lot of activity. And it's also a ticker that gets a lot of noise and a lot of hedging. So you got to be mindful of that, along with the other names like Apple, Microsoft, SPY, and so on. So any big name, any mega cap that gets flow, and we already provide the same screenshot, like we're gonna provide this and this, so you guys can see the total premium on the day. If it's above like 100 million, 500 million, a billion, it means that a lot of options are traded on that ticker, and there's gonna be a lot of noise. Now, taking a look at this trade, right? How to analyze this. So the first thing is the contract. The contract is NVIDIA 360 calls for January 2028. So basically 3 years from now. The trader transacted 2,128 contracts. Their average fill was $16.48 per contract, and they spent $3.5 million on it. And the OTM, out of the money, basically means the stock price compared to the strike. So that's the difference between the stock price and the strike price. So Nvidia is trading at 193, 194. The strike price is 360. The difference between that is 86%. Now, they aren't buying these calls, they're selling them. So whenever a call is at the bid, they're selling. Whenever it's at the ask, it's buying. Same with puts. If it's puts at the bid, it's selling. Puts at the ask, it's buying. So in this case, they're selling these calls, which is bearish. They're betting that it remains under 360 or whatever. But I've been looking at flow for a while, and if I was to post this flow in the chat, I would be like, this is a hedge. Why? Because it's 3 years out, right? If you know anything about options, theta decay is a thing, right? 3 years out, they're selling these calls just from theta alone. In 1 year, these contracts are going to lose a ton of value if Nvidia doesn't really spike a lot. Um, so this could just be them trying to collect premium, and it also could be cash covered calls. If you know that strategy, basically they have a large share position on Nvidia, and they're just selling calls just to hedge. Um, so this is something I would mention as a hedge, and this isn't something notable. I wouldn't take a trade off of this. I'm not gonna say buy puts on Nvidia for 2028 just because this is bearish. But looking at something like Microsoft puts, This came in yesterday. Microsoft 520 strike puts for November 14th. 12,000 contracts transacted, 1678, 1617 is their average, 20.5 million is the premium, and it's 0% out of the money, so that means that this is a at the money contract, and they're buying these puts. It's at the ask. This is something notable. I just said that Mag 7 names get a lot of premium. They do, but it's also hard to catch really clean flow like this that isn't just put selling or call selling. This is straight up buying. Um, and I mentioned it in the before and mentioned it before, but if you're a new member, I've always said that if size is greater than 10,000, keep an eye on it for any ticker. 10,000 and above in size for me has usually been the best, like it's the sweet spot to get good flow off of. And the premium is just insane, 20 million. So this is something I would keep an eye on. I'm not going to short Microsoft just based off this, but I will look at the chart because of it. And I will keep in the back of my head that, hey, someone is short Microsoft for 20.5 million. Any questions on that? You'll never know if it's a hedge. You'll never know if it's straight up just buying. That's up to you, but you can take an educated guess like I just did. I don't think this is a hedge. The reason I don't, and to give you more of my psychology, is when you're looking at the options chain, right? There are certain expiries that have a lot of volume. So for November, it's 11/21, right? It's not 11/14. You can look at the options chain. You can look at the volume for all the contracts. For 11/21, all the contracts have higher volume and OI compared to 11/14. 11/14 is an odd expiry. It's you don't see it come up a lot. You'll see whales pick up like 11/21, but you won't see them pick up 11/14 often. So that alone is like strange. Like why are they picking a specific strike? Because again, remember these guys are traders too. They're human on the other side. So whatever they're doing for a reason. They didn't just drop 20 million just out of the blue. How do I find a second leg if multi is more than 30%? Yes, this is recorded, yeah. So multi-leg we don't post. We don't post it because a lot of it's like I would say like 70% of the time it is just hedging. I can pull up a multi-leg contract right now to show you. Let's take a SPY right here. So this is 99% multi-leg. So this is entirely multi-leg. It's a $12 million position. And if I just click on it, I can see the legs. Yeah, so I'm not gonna get into it too much. I just want to explain why we don't post multi-legs and we only post single legs. So this, according to Unusual Whales, is like a short put butterfly, whatever it's called. Um, it's you can look at it if you're into spreads. You can ask me like, hey, is there a spread on this ticker? But we're not gonna post because it's not really popular to do this, and usually it's just hedging. Um, that's basically it. But if you do have an Unusual Whale sub, just click on the bar and you can see the other legs, like I just did. You just click on it and then you'll see this icon and you can see all the legs. But we don't post multi-legs because it's usually just hedges. Uh, we did start a YouTube channel, but maybe later on. Twitch, I don't think most people, especially in our community, use Twitch, but X maybe. For example, if we get a call flow for a ticker that has a later expiration date later this year or next year, would people hold until that date for max benefits if the whales don't pull their money? So, really good question. So Nicole is asking if these guys are gonna hold into expiry, especially if it's like a year or two out. And the answer is it depends. So I've seen whales hold into expiry. not sell at all while being up 100%, 200%. I've also seen whales exit 2 minutes after they get in. So it really just depends on the person on the other side. Um, but for us, right, because that's what's really important, what we do, we need to exit in profit or cut for a loss when we see fit. So let's take this put buyer for SPY as an example. If I bought these same puts and I was saying I'm gonna follow this whale, if I'm down 50%, I'm gonna exit because that's my own risk. I'm not gonna wait for this guy to exit because he can blow $400,000 and his portfolio will still be okay. But for me, a 50% loss, I need to manage it, right? On the other side, if I'm up 100%, if these contracts go from $1.18 to like $2, I'm gonna sell because I'm in profit. I'm not gonna wait for them to exit because maybe they don't exit, and oftentimes they don't. They just hold. I don't know why. They just let them expire worthless sometimes, or just yeah, they just do their own thing. So don't worry about that. We will always update like any large flow that has been exited. So if let's say that Microsoft put buyer, right? I don't know if it's on the list for today. It should be. But we're gonna update if they held. So if they're still holding, we'll let you know. If they aren't, then we'll also let you know. But if you have any like specific question on a specific contract for flow that you saw, like let's say, I don't know, this MSTR call buyer, right? For 7 million. If we don't update it, you can ask us like, hey, this is the contract, are the whales still in? And we'll tell you. If they have exited, then you exit as well automatically because if they saw something they don't like, then why are you holding? But if they're still in and you're up, that's up to you if you want to take profit. If you're down, that's up to you if you want to manage risk. Um, the biggest thing I will say is whenever following a flow trade, don't follow it blindly. Always look at the chart for MSTR in this case and don't over leverage. Like don't buy a ton of contracts, don't full port this position because whales can be wrong. Like I've seen whales blow $40 million in a week. And I've been on the bad side of things. Like I remember like my biggest loss was following AMD calls into earnings. The guy had like $35 million in the position. I was like, I'm just gonna follow the guy. He has 35 million. He probably knows something. AMD tanks. I lose like 90% of my position. And at the time, I was dumb. I over leveraged a little bit and I lost a crap ton because of it. So manage and always have risk as your top priority. Um, Especially on like a short dated contract. Like this is 7 days till expiration. No reason to full port. Like please don't full port on anything, but in this case, this would be really dumb to full port on. It's a 7 day contract. If you hold into Monday over the weekend, you're already down like 20, 30% off of theta. So just putting it out there. Yeah. I think that's just Advil or or yeah, whatever. I can't pronounce that, but Advil. Yeah. Nancy Pelosi does do that, and a lot of whales do that. So you can you can follow them, just have your own take profit and stop losses set. So with bid and ask are those transactions that took place or transactions trying to get filled. These are all transactions that got filled. They're not limit orders. So these are people in the position. Like this person bought 7.4 million and OI carried. So yesterday they bought 18,000 contracts. Overnight they held close to 17,000. So they currently, right now, before market open, have 17,000 contracts on MSTR calls that they bought. So they're long 17,000 contracts on MSTR. And until this OI value changes by like 10,000, 16,000, like it decreases 10,000, 16,000, they're still in. So that's how we know that they're holding their position based off OI. Makes sense. Thank you. Can you take, for example, the flow of Poet these last few days? There was heavy call buying for the 2027 and 2028. How do you know if the buyer is still holding these contracts or was it just a swing trade for the buyer? Um, that's a good question. Another thing I'm gonna get into is whenever a stock experiences volatility, like Intel or Poet, you'll see a lot of people chasing that with large money. And yes, people with large money can FOMO, and I've seen that a lot. And you need to be mindful of that. So going, let's say the past week. All right. So we have a ton of Poet bullish call buyers. So we have this one for 2026, and it seems they exited. So I'll tell you why. So this person originally bought close to $1 million in Poet calls for 2026, April 2026, and they exited for a small profit. So they were up, they entered at $1.09 a contract, and they were up close to like 70, 80% at one point, but they didn't exit there. That's the interesting part. If you tailed this, right, at the exact time or close to that fill, you would have been up 70, 80%. But these guys didn't sell until they were only up 30%. So they left a lot of money on the table. They left close like $50 per contract on the table. You see how dumb that is? If you were to follow this whale like to the point till they exit, like you would have left a lot of money on the table. You could have just sold here, right? If you had a profit target there. But in this case, I don't know what they were thinking. They left a lot of money. They only made like 200K off that when they could have made like another 400,000. So yeah, that's why we don't follow the whales until they exit. Unless they do exit, you exit, but we just have your own thing. But going back to the question, Poet, I don't know how much it's up. Let me just check real quick on the weekly. Yeah, so it's up 57% in the past month, right? If you're seeing call flow on a name like Poet coming in when it's up 57% in a month, try to be hesitant. Don't chase it because it's already overextended. Like you don't want to buy the top, right? And you'll see a lot of people do that, especially when a ticker runs up. So you see these guys. So they also bought calls on Poet. This is for 14 days out. But you can see that they're pretty much stagnant. They haven't really seen much profit. They're in a loss right now. Based off yesterday's close, they're down like $30 a contract. And they probably just FOMO'd. This isn't good flow. This isn't something I would recommend because I would say like, hey, the stock ran up already. Don't chase it. And it's 14 days out. So maybe they're just betting on a potential pop again. Maybe it pops today, who knows? But it's very risky at that point. So always be mindful of that. You want to know like you just don't want to buy like a very volatile ticker. I know it may sound good, and if especially if you miss the move, you want to get in based off flow, but try to take a step back because people with large money can be stupid as well, and you don't want to be on the bad side of things. What is the meaning of STO? STO means sell to open, so they're basically selling the contract, whatever it is. And what scenarios are holding onto contracts till expiry better than taking profits early? Um, so for weekly contracts, like I would say this Poet contract, if this was quote unquote good flow, um, you would exit when you were in profit. Like I would say like if you're up 20, 30%, just take it. It's 14 days out. You don't want to hold for long, right? So as soon as you see some good profit, trim, take profit, move on to the next trade. But if you were following something like Amazon Leap call buyers, which I've called out a few times because it's really good flow, um, you'll see that it's for May 2026. So you have a bunch of time on the contract. So don't expect it to work out tomorrow or in a month because you have 217 days, right? So for this type of trade, and for this type of setup, you want to wait. You can hold for a month or two. Give it time. You need to realize that before entering, like go in with a plan, like, hey, I'm gonna hold for a month or two, gonna let it do its thing. Um, but you wouldn't want to hold into expiry. Because I think maybe by March, these contracts will be losing a lot of value at that point because of theta. So you want to exit before maybe February or in January max, just to avoid theta. So you need to keep a lot of things into account, but I would personally recommend never holding a flow contract into expiry because you're just going to do yourself more harm because of theta decay. What I do is buy multiple leaps, sell most of the contracts, and use the profit to pay for the shares, basically free shares. Yeah, you guys can do that. Again, there's no like one way street with this. Like you guys can use the data as you see fit. Um, if you see these Amazon call buyers, you guys can buy shares. You don't have to buy options for it. Um, you guys can have a bullish spread, or whatever you want to do based off this. Because basically, like what this whale is betting on is they're just betting Amazon trades 260 by May. That's literally all it is. And they're adding, of course, they're averaging down here and there. So that adds more confidence. They're just betting it goes to 260. So you guys can play that as you see fit. You guys can do like a different contract. Like you guys don't have to do May. You guys can do 2027 if you want. Real quick, because that gave me a good point. If you're following any flow trade, any single flow trade, whether it be weekly, leap, you always want to buy the same contract or farther dated than that. Meaning, like I just said, if this is for 260 strike for May and you think it's like a shorter expiry, you want more time, no worries. Buy, I don't know, September 2026, but don't buy January 2026. Right? Don't buy a weekly contract based off this flow. Buy the exact same contract. You don't want to expect Amazon to be at 260 today based off a trade that is intended to work out like a few months later, right? Don't do that, please. How do you know a whale exited? So the basic concept is open interest. So open interest is the amount of open contracts on any options chain. So in this case, there are 24,000 contracts open on this contract. And I can go through the history of the OI and I can know that if they're in. So when they originally entered, these whales originally entered, OI was 357 contracts and they held 7,000 contracts. So as long as OI is above 7,000, I know that they're still in. Then they added another 5,000 contracts and they boosted the OI to 14K, bought more, 18K now, bought again, now it's 24,000. So basically 24,000 contracts are open on this position by one whale. So I know that they're still in because of OI. If you're confused, just let us know and we'll tell you. Why do you indicate bearish for a call option? Um, so the basic concept is, let me go to notable flow because we have it pinned. Again, if you have like any questions on any channels, always go to the pin section. We have tons of information there for you guys. All right, so someone posted this recently. I'll link it here as well for you guys. You guys can read it. But basically, the call buyer is at the ask, right? So calls at the ask is buying. Calls at the bid are selling. Calls selling is bearish. They're basically betting that the option value decreases and the stock price goes down and they'll make money off the difference. Put buyers are when puts are at the ask. Put sellers are when puts are at the bid. What they're at the bid, it's bullish. So when you're selling a put, you're betting that the stock goes up. Put values decrease. and you collect the premium difference. Try to memorize that. You guys can print it out if you want. There's tons of resources on Google. Just print it out, have it at your desk. But we'll always tell you if the flow is bullish or bearish anyways. Is RGTI same as Poet? And if it's FOMO, a put for November is good. So I'm trying not to analyze any flow for this class. But this concept is similar. Like if RGTI has pumped a decent amount, it really depends on your technical analysis. Like I really can't like it's up close to 200% in the last month. If you see call flow on RGTI and it's up 200% in the last month, you need to like take a step back, right? Buying calls on anything that's up 200% is risky alone. And these whales can just be bored and they could just be doing it just for fun. And they do that. Like I'm telling you, these whales can be really dumb sometimes. Um, and yeah, we have like bullish put sellers. They're basically saying it stays above 33. This could be a hedge, who knows? But let's take this guy for example. Okay. So it's fun when you can like analyze OI to see when they exited because it tells you like what they were thinking a bit. So this person, right? They bought the 60 strike call on RGTI for October 24th. They bought 1.8 million worth. Large bet, right? Large bet, especially on like a short dated contract. They held, right? And then the next day, the exact next day, they exited 3,000 of those contracts for an L. See how funny that is? So if you saw this contract come in, this flow trade come in, and you were like, oh my God, someone's buying 1.8 million on RGTI calls. I should get in. RGTI is up 200% on the month. It's very overextended. And this guy just had 1.8 million lying around and he decided to let me just throw it on RGTI. And the next day at 10 o'clock in the morning, he exits 1 million worth. Super funny. This is why you got to be careful. Don't take every flow trade. We post like maybe 200 posts in a good day. That's 200 trades. Maybe 10 or 15 of them are really good. And then out of the 10 and 15, maybe two are like very good trades, like the best of the best, right? And this RGTI just comes in the 200 posts that we make. And it's really up to you to decide if you want to take it and risk it. But it's good flow, so we have to post it. We're just posting the data. At the end of the day, it's up to you. So try to like um gauge it a little bit more. Like don't take trades, especially on risky names. Gotcha. Wow, seems like whales are just like us. Yeah, they're literally just like us. They just have more money, but with the added benefit that they're a little smarter and they know a little bit more about the company sometimes. Maybe they're an insider, who knows? What should be our target for profit and loss? It is different for each person, but in general, how much is manageable? I can't really speak on that because everyone has their own portfolio. Some people are trading with a few $100s, some are trading with a six-figure port. Um, but irregardless of portfolio value, you don't want to full port. You don't want to hold for a minus 100% position unless it's like a very light position and it's a lotto trade, right? Um, One of the best tips I ever got was always take profit at 20% and just stack the wins and keep your stop losses tight. Um, that's what I usually go off of. Like I'm very conservative myself. Like um I don't want 100% trade. Yeah, it's nice, and if it comes, great. But I'm not gonna go in and enter a trade hoping for my money to double. I'm good with 20%, 30%. So I would definitely make a plan beforehand. like if you're entering like if you're entering that Amazon contract, right? And it's a lead position. Let me just show you like my thought process. So I'm entering, let's say I enter today at $12.50 a contract. So basically $1,200, right? I have $1,200 on this position, one contract. I'll probably take profit if I see 20-30%. So you guys can do the math. So a few $100s, I'll take profit. Great. Because it's a lead position, because I have a bunch of time, I'll probably let my stop loss be a little wider. I'm gonna give it room to um, work out. But I'll probably set like a maybe 40% stop loss, 50% stop loss, because I'm okay with that. I'm okay losing 50% on a leap contract because Amazon, I know based off my other technical analysis, which is really important, that Amazon looks bullish. It's lagging across the sector, across other names compared to other names. So I'm gonna let it ride out. It's a good risk reward trade, so I'm okay with losing a little more, just for it to work out. So it really just depends. I would try to um, paper trade for a bit. I know people hate that term, paper trading, but it really does help building a strategy. Um, just try to do it and try to see what works for you. Why why do you have to check the open interest the next day? How do they reduce in the overnight? So open interest updates every morning pre-market. It updates once a day every morning pre-market, based off yesterday's activity. So today's morning's OI update will include all the trades from yesterday, and it will include how many contracts carried over. So we're gonna include, let me just show you guys the channel. So for yesterday, this is for yesterday. So you can see this AMD flow up here, 1.1 million. It carried over because 1,100 out of the 1,200 contracts that were bought by the whale were held. So OI shows you if the trader held the position. That's basically it. So if OI updates similar to the amount of volume we saw, that means that they're still in. I hope that answers your question. It reduces like if they don't hold, that likely means that they just exited intraday or they just exited at close. Like they had like a limit order set and they didn't hold when the market closed. That's basically it. Can you do an analysis on the call for MSTR that came in yesterday for 345? Let me see if I can find it. 345. Okay, this one. All right, so yesterday, a person bought 7 DTE calls on MSTR, 4,700 contracts, $2.1 million. Pretty large trade. Looking at the open interest, out of the 4,700 contracts, they held 3,100. So they're in. They're holding 3,100 contracts. They cut some for some whatever reason, but they're still in. Now, based off this one flow trade, if you like it, if you think this is a really good flow trade, awesome. Check out MSTR's chart. If MSTR's chart lines up and you think MSTR is going to go up and this trade just came in, use it as confluence and you can do two things. One, either follow this exact contract and try to fill close to $4.51, which is the average of the whale, or you can buy November calls or December calls on MSTR just to be safer. I always recommend buying time, even if it's a weekly flow contract. It's just more it's just more secure and more insurance. Yeah, you're paying more for extra time, but it's just safer. Like, um, what if in this scenario, right? MSTR doesn't pump today. It pumps Monday. Now, if you were in this weekly contract and you held into Monday and MSTR was going up, you could likely be red just because of theta decay over the weekend. But if you had November calls, you would have been green on Monday and avoided that because it's a farther dated contract. So that's basically it. I'm not gonna say if this is a good trade or not. It really just depends on the chart, and I'm trying not to do that for this session. Maybe I can do a class on Monday. I mean, like a VC on Monday morning, and go over that stuff. But for this class, just be mindful that the chart precedes the flow, and you want to take everything into account before entering. Based on these flows, sometimes I buy 2x ETFs. Um, so I don't know what that means. Like, uh, is it based off SPY or QQQ? But if you're referring to like the Amazon flow, like, yeah, you can buy AMZU. I know, I think Dean in our premium chat did that. So he saw the Amazon flow and he just bought AMZU shares or leaps on AMZU. Works out, whatever you guys want to do. Does unusual whales show risk reversals or do you need to correlate those manually? Um, like what do you mean like risk reversals? Mateus. Whales are just like you and me, but have more money. Yeah, exactly. But they're a little smarter because they have more money. Like they got to that point somehow, right? Okay, wish for you ask. No, I know how to read ask, bid, and mid and volume. Total amount of bid and volume. Mid is the same as volume, so I want to know. Sorry, could you rephrase that? I'm not really sure what you're asking there. Is it better to use opening orders on the flow or it doesn't matter? Like what do you mean opening orders? So basically what we're posting is an opening position. Um, Opening position basically means volume is greater than open interest. If volume is less than open interest, it could be an exit. So in this case, let's say instead of 4,700, it was 471 and OI was 3,400. That is not a good trade. I would not look at that. You want to see volume greater than OI, and that signals an opening position like 90% of the time. Um, so that's only what we post. If you see anything on X that has like, I'm gonna type in the chat. So if you see this, where volume is, let's say, 500 as an example, volume is 500 and open interest is 1,000. This is bad flow. This is likely an exit of 500 contracts from the existing 1,000 that are open. You don't want to look at that. UAMI pump 10%. That's great. I don't know. I think we posted flow yesterday. I was kind of busy, so I wasn't really that active, but I have to look. Can you touch quickly on the market tide and which features you like to use on the platform to get a feeling about the market? Yeah, for sure. If you guys have any questions on flow, please drop them. I'm just gonna go over market tide real quick. So we post market tools in our market data channel. Now, this is gamma exposure and market tide, basically net premiums. So I'll go into them both really quickly. I'll do a separate class for them later on, but I'll just um, quickly go over them. So market tide, right, basically shows you the entire activity for entire market, options wise. So the red line here is put options. The green line is call options. The dotted line, the dotted lines that you see is for OTM. It's basically this. You guys can think of it as the same thing for now. Like if you're a beginner, don't worry about it too much. Just focus on the red lines and the green lines together. The yellow line is the price of SPY. It's just charted there so you can see how SPY reacts based off those other two lines. Um, the common concept is this. Whenever the red line crosses the green line, it's showing you that people are buying more puts. So you guys can spot divergences that way. If you see SPY going up, like this yellow line going up, or just SPY in general on TradingView pumping, but this red line is going up as well, that shows you that this move is being shorted across the market. Vice versa, if the green line goes up, it's showing you that people are buying calls, they're longing SPY. And if SPY is going down and calls are going up, it shows you that people are longing this move. So it just shows divergence, which is, if you guys know anything about divergence, it means that a reversal is possible in that direction. So if SPY is going down, calls are going up, it may signal that SPY can reverse. Maybe the same day, maybe tomorrow. We also post premiums for ETF specifically for SPY. So if you're only day trading SPY, this is for you. You guys can see when calls are spiking here, that price follows. Options are usually a leading indicator. So these lines will increase or decrease, and then the move on SPY will follow suit afterwards. So yesterday, puts were in control the entire day overall, and SPY was just dragging down, right? Um, you can also see that right here. I don't know if you guys can see my like mouse, but try I'll try to make it as, let me actually go to here. Okay, this is easier to show. So you guys can see here around 10:13, 10:10 that SPY was trading at 672 a share, right? And the put line, the red line, increased drastically. As a result, SPY started to fall down, right? That's literally just showing you that traders were shorting that move around 10:13, 10:20-ish, and it worked out. So if you saw this spike on SPY for puts, that could have been a signal to, hey, maybe I should trim my longs, exit, manage my stop loss, whatever, get into puts. Just, just use it as confidence that something is happening. And towards end of day, you can see that call premiums were steadily increasing, puts were decreasing, and SPY just ran up a bit into close. So it just shows you like market internals, what people are betting on, options wise, across the market and for each ETF. I have a video on that. If you guys like want to watch like a more in-depth video, I do have it in OGS educational videos. It's called How to Spot Divergences Using Market Tide or Net Premium Chart, based off what we post. And I'll forward that in the chat right now. Gamma, you just use as levels. So I posted SPY, QQQ, IWM, and SPX levels. You just mark these levels on your chart, the biggest spikes. So in this case, you'll mark 6775 on your chart and use it as a level. I go into depth on gamma levels as well. Just scroll up, and there's tons of other videos too, guys, like how to use Notable Flow to find good trades, how to make money off of it, common questions answered. This is the video for Periscope, so that's Gamma. Watch it. There's tons of resources. Like we have, I think, the most resources compared to any other Discord for this stuff, and we're the only one that does it for free. So if you guys have any questions, we're always here to answer them. It could be any question. And just look at the resources, maybe on the weekend or whenever you guys have time after work. When Lamborghini giveaways? Well, I need a Lamborghini first, and then I can think of giveaways. I took FCX 38 calls for 2027. The OI was over 12,000. Now the OI is down 9.3K. Does that mean 3K contracts executed? Let me look at that contract for you. So FCX, you said 2027, 38 strike. Okay. All right. So this whale bought $6 million in FCX calls. They're currently up. Wow, they're currently basically up like they're up almost 100% at one point. They're basically up 100% right now. So they doubled their position and they haven't exited, right? Perfect example, they're up 100%. They have plenty of time on the position. If you followed and you're up 100%, you can either exit or just follow them, but I would recommend to exit and take profit, right? Because they're not exiting, even though they just made $6 million, right? But going back to the question, these whales held 9,000 contracts, and since then OI has decreased, but it hasn't decreased in the thousands. It's been minus 327 here, minus 324 here, 243 here, 81 contracts here. Overall, they're still in. Um, because the volume was 12.6K, it doesn't mean that OI will update 12.6K. It's whatever they held on to. In this case, they held on to 9,000 contracts. So that's the OI. That's their position now. And whales are probably gonna exit their position in similar size to the amount that they entered with. So in this case, I'll know that they exited if I see a sudden drop in OI by 8,984 contracts or close to that. If they exit by 1,000 or 2,000 contracts, that's also valid. It just means that they're trimming, which is in this case more likely because they may trim 1,000 out of the 8,000 contracts just to take some profit and leave 7,000 as runners. Who knows? But in this case, they're still in. Rookie, they're still in. Uh, Too Fat is asking, you said buy more time for a higher price. Any suggestion on what percentage you would pay for the additional time? MSTR was 436, but if someone bought more time, would they want to buy 10% higher as a rule of thumb? So it really depends on what you can afford. So going back to that MSTR contract, um, so they bought like 14 days out, right? By November 21 calls, or November 14 strike calls, expiry calls, if you can afford it. If not, then just tail that weekly contract and just size light. Like if you usually go in with 10 contracts on a position, because this is a weekly and you want to manage risk and you can't afford the higher expiry, go in with half the size. Go in with 5 contracts, 3 contracts. Just because the odds of you being wrong on this trade are higher because of multiple factors you can't control, such as theta decay, such as chop. If MSCR is range bound for 1 day, and because you have a weekly contract, your premiums are going to get eaten up. And then at that point, you need a really big move on MSTR to make the difference. So usually, if let's say, I'm just gonna give you an example in the chat. So example for buying more time. So let's say for Nvidia, I was trying to buy calls. So Flow came in for 200 strike calls for 1024, right? I would buy more time and do Nvidia 200C 1121. I can do that. If I can't afford it, like if I can't afford 1121, I can do a more out of the money contract. Like let's say I will do Nvidia 210 strike calls for 1121. This is another option, and I do this a lot. And it's because one, you're already buying insurance through a further expiry, so you have a little bit more leeway to buy a more OTM contract, right? Because of the expiry. I wouldn't buy Nvidia 210C for 1024. It's more risky. At that point, you're adding more risk to yourself, and you should know that. But because I'm adding more time on my contracts, and because theta decay is a little more manageable, I can afford to buy a cheaper contract by going 10 strikes out. That's another option you guys can do. Yeah, the more the better. Usually, like I love Leap Flow. Like I love that Amazon 2026 contract because it has more time. It has a lot of premium. It like checks all my boxes, right? And because of that, it's just like safer for me to trade it. I've usually found that Leap contracts, like contracts with more time, tend to work out better than short dated contracts off of Flow. Um, and that goes back to psychology, right? A whale is human at the end of the day, but they're also they also have mixed like personalities and stuff, right? So maybe they're a trader who is really smart, like really smart, and they're trading earnings, but they'll buy like 2027 contracts and keeping in mind like future earnings as well, not just that one earnings report tomorrow. So they're buying a position for 2 years out based on their, I don't know, analysis of like multiple earnings and multiple expectations going forward. So those are the smarter whales in my opinion, and they usually work out the best. Short-dated whales are just like, I wouldn't say gamblers. Usually they're right if they know something, but most of the time they're wrong because they're just gamblers. So just try to keep that in mind. When you're trading, buy more time, manage your risk, and I promise you your win rate will be high. And don't focus on the green, don't focus on the profits. If you're trading off of flow, I can bet you that you'll definitely have a 100%, 200% winner. Um, Maybe once a month or maybe every other month. Like it's more common. So don't worry about them. The money will come, just focus on executing. Do you give option alert for member? I'm not, so you're in premium, so we do offer alerts in our premium side, but for our free side, we have Flow Watch List. This is basically where me and Selma post some good trades, not all of them. Just something for you guys to tail follow with our analysis with the chart. So if you're a beginner, this is a perfect example of what goes through our head. Like I signaled the roadblocks. I gave the whale average premium, what I think is gonna happen, my chart as well. And if you tailed it, you would have been up like $100 a contract, like the next day or by close, I think it was. So yeah, we do that for our free side, but we mostly focus on our alerts for our premium side. Any questions, guys, on anything? I know I said a lot. I'm gonna post a recording as well. But if you guys have any questions, drop them below. I swear to God, the other day it was like 80 degrees in New York, and today is like low 40s. I don't know. This weather is insane. Okay, let me save the video.